And we are live. Welcome to the stream. Had a 2-week break because I had been I was in Rome last week. If you've seen in the Telegram group, I just posted a picture of a Bitcoin ETH bar, which is pretty cool. I just need to post something in the chat and we can go. Right. Here we are. So, welcome. Today we're going to be talking about cash flow and specifically about the exact strategy that a lot of the guys in the group 10K Fast Track are using to, one, monetize crypto, two, earn a daily, weekly, monthly yield, however often you want to claim it, and just compound the Bitcoin holdings. Because for me, that's what it's all about. It's about the biggest asset in crypto, the best asset in crypto, accumulating more of that asset, and then as you build more Bitcoin, you get more yield back off it. I'm going to show you how to do that. So what do? We've got to start somewhere. So you start, and let's just say you're starting from 0. You may have no crypto. Okay? So the idea is, and you may have it already, is buy, one sec. Here we go. Buy BTC. Yep. You buy your BTC. Once you accumulate that BTC, you then get a loan against it. So you buy BTC, and let's just say for easiness of this diagram, let's just say it's 1. So you buy 1 Bitcoin. Yep. Then, next stage, loan, which is roughly like 25, 35% back off that. So if we would say price of BTC today, the timer of the video recording in US dollars is 77, let's just say 77K, 25% of 77 is, it's basically 20K-ish, right? Which is about 20K BTC. Now, what do you get a loan for your BTC, you may ask? I've shown previously that institutions like Coinbase have started offering loans. Yeah. Now, the rate that they will give you, which will probably be around maybe 5-6%, maybe 6% more, basically means that, you know, your collateral is then in Bitcoin, in Coinbase. So you lock up your Bitcoin with Coinbase, which is the collateral. They then give you the USDC, and then you can go on to the next step. However, as you'll see on here, this is who they use. So you've got a few options that you can use. Yeah. One of them to use is Aave. So you can see I've, for this example, there's around $1,800 of Bitcoin locked up here, and there's a $600 USDC loan, around 4% rate, which is not much considering that you are, well, the last month they earned 6.77% a month in a pool. So it's nothing. So you've got Aave, you've got Coinbase if you want to stick with centralized, probably not the best option to be honest. After that, you have got Spark. So this is another one. And again, I've shown this quite a few times because you can simulate this by using a sandbox mode. So you can supply your BTC and then borrow your USDC to then use in pools. And the rate for this one, 4.66%. So Spark is the other one. And then the final one is actually who Coinbase use for their loans, which is Morpho. And the rate they're offering for BTC, I think this is the page, markets, here we go, 5% they're offering. So Coinbase would probably charge 6 because obviously they get it from these. So we're looking around 4-5% that you get on the loans. And again, with a crypto loan, I don't know what Coinbase's terms are, but in DeFi, so in Morpho, in Spark, in Aave, there's no middleman. It's all done via smart contracts. There's no time frame you have to pay it back. There's no set amount you have to pay back per month. It's just the interest gets added on. And in theory, if you are earning, which you should be, more than that in a year on DeFi, which, let's be honest with you, that's what happens. Then you're fine, and your asset that you've locked up in collateral should go up in price. So let's just say we go back to here. You've taken your BTC loan. That means you've locked up this one BTC. If you lock it up now at 77K, let's just say a few years down the line, on the balance of probability, on the balance of previous historic price action, this is most likely going to be more. So your asset's going to be in price. The main reason we are looking to do this as cash flow is one, people like accumulating Bitcoin because they know that it's going to go up long term. And two, it's actually utilizing Bitcoin without selling it. Because the big thing that people talk about all the time with crypto is they never want to sell the Bitcoin. But the problem with never selling the Bitcoin is never making any money off it. So this is the way you make your money. You satisfy two needs. One, you make your money off your Bitcoin. And two, you keep your Bitcoin. So you never sell it. So stage one was the BTC. Stage two was the loan, the 20K, and then you can go shopping for yield. As mentioned, you still own this BTC, it's just locked up. So you've got 77K locked up, then you've just generated another 20K. So you've got 97K really. But obviously 20K to put in pools. So 3 is your pools. And this is the beauty of it. It's entirely up to you. Now, I've shown the pools that I'm in. Again, I've talked about growing this 10K on here. This is earning about 100% APR at the moment. And it's roughly accurate, this. I claimed it the other day. And the two pools I'm in is an ETH Aave pool and an ETH Kita pool. I'm not telling you to get in those pools, but that's a selection of what is available. So the platforms, I hope you're writing this down. So the platforms you've got available to search on, one, VFAT. VFAT is for the EVM chains. So you've got Base Chain, Monad Chain, Avalanche Chain, Ethereum Chain. Yeah. However, if you want to use it in different pools, or you've got coins you want to use in different pools, there are other options available. So the obviously other big one that I've used previously is Orca. This is the Solana chain based pools. So there's a variety of pools on here, but specifically for Solana. Then you've got Turbos. Turbos is specifically for SUI. So there's loads of pools on here. Good question here. I mean, if VFAT's just an aggregator, so all VFAT is doing is it's pulling the API information through. Yeah. So VFAT itself is not where you're depositing any funds. So if you look at mine here, you can see it's Eurodrome. And if you search pools, the largest ones are Uniswap. So that's the actual protocol that it's on. In terms of reducing the risk of hacks, etc., that's why I personally tend to stay to pools with high TVL and platforms that I trust. So if you're going on here and you're looking for some stupid ranges on, for example, this here, I don't know what this is. So if you were to go on this, 1K average range, no idea what this is, a random coin called BS, then that's a red flag. And there's a lot of meme coins on here and stuff that you can get involved in. And the TVL on them will be like less than 10K. And then that's where your problems set in, you know? You do get hacks and they tend to be on the smaller pools and smaller chains. And to be honest, the actual biggest risk that you've got is getting in a pool where one of the assets get rugged. Yeah. So obviously me being in here, I believe Kita, Ethereum, and Aave are good assets, but that's me. You may not believe they are. But what a lot of guys are doing is getting into pools and farms that are high TVL, which are more in assets that they like. So it could just be, obviously, the main one is an Ethereum USDT pool. Yeah. On Uniswap. And if you want to do more research and you want to look up what these protocols are, how much money is locked in them, it's all in front of you here. So obviously, we know the recent stuff with Aave, it wasn't Aave that was actually hacked. It was a staked ETH token. So this is for people who stake their ETH, then want to restake their ETH by using this particular token, which is stupid. And you can see here, so Aave that I spoke about before, 14 billion locked in that. You've got Morpho, which is the one that I spoke about with that Coinbase use, 8 billion locked in that. Spark, 6 billion locked in that. So, you know, these are Uniswap, 3 billion. There's a lot of money locked in a lot of these. And if you want to find out more info, click on it. You can see how long that they've been active. You know, how much they make from fees, how much revenue they make. You know, everything about the particular treasury, expenses. There's just so much info here about all these particular platforms. But all I would say is, obviously, there's not 100% no risk. There never is with anything in crypto. I mean, let's be honest. Invested in Bitcoin is not 100% risk-free because there's always something that could potentially happen. But at the end of the day, it's risk reward for me. You know, I don't want to keep my money, albeit, you know, some of it in a 3 to 4% yearly savings account, which is in the UK, which is, basically doing nothing. And on the flip side of that, I know a lot of people do not want to keep their crypto in a wallet doing absolutely nothing. Now, obviously, you can go down the staking route. Staking rewards, you got 3% ETH, 6% Sol, 2% Hype. But again, it's like, is that going to get you cash flow? Is that going to get you cash flow? Because that's what this is about, this stream. Cash flow. And it's a case of working out what cash flow you can get. I shared a post giving an update for April on my YouTube, basically detailing what happened. And it shows that $280 earned on 4K, 6.67% a month. And if you want to know what that is, if you scale it up, 10K, that's 667 a month, 25K, 1,700 a month, 50K, nearly 3.5K a month in those particular pools. And that's just, cash flow. And again, for the method that I'm speaking about here, you obviously choose your pool. Let's just say it's 5% per month. Yeah. You earn that 5% a month of 20K. Top of my head, I think that's $1,000. So that's 1K a month. And then the idea is that 1K that you've earned, you go back to step one. And it just repeats. And then the cash flow flywheel just keeps going. And the thing that underpins the cash flow, because you may be thinking, how can you keep doing this? Is the fact you've got an asset that appreciates in price, right? And you could just do this till you reach the amount of Bitcoin you want or whatever, Or you may not want to buy more Bitcoin. You may want to go back to the step here. Which I've shown before. Earn your yield, and then, you can go back to stage one, which is to stack the BTC, or you can just spend it. There's so many ways to do it now. I've spoken about Revolut. They're actually classed as a UK bank now. And you can basically receive crypto straight into your Revolut account and you can spend it. So you could combine that with this here. You can buy, there's another website as well. Bit Refill, I don't know if anyone's heard of this. So with your yield, you could just literally use this here. Amazon gift card, Uber gift card, Airbnb, and you're just paying crypto. So you go on here, that 1K a month, right, boom, Airbnb, gift card. Obviously you have to create an account on here. Let's just see what it does when I do this. I don't know what, here we go. Right, so you can connect your wallet. And then you pay in crypto. I'm just trying to see what you can actually pay in with this. There we go. BTC, ETH, USDC, base chain. Oh, that's all the chains. And there you go. Do Christmas on Bit Refill. So you got BTC, Ethereum, Tether, USDC, Litecoin, Dogecoin, Solana, Dash, and Sui. And you can also have a crypto debit card with them. eSIM. So that's the game. Or obviously you can stack stocks. But the idea is you've got the existing asset, and that's how you generate the cash flow. Now, obviously, if you're starting from a lower point and you don't have a lot of BTC, a shitload of BTC that you want to take a loan against, you just skip to a different one, which is alts, providing the decent. 2, pools. 3, yield. So now go on VFAT. What is that? You've got Avalanche, right? Avalanche. Boom. What have we got here? 8%. Range is not that great on here. Let's see what we can get. Wrap Teeth, Avalanche. %30 range, 36% APR month. Not month, sorry. It's just a case of shopping around to see what you can get. And again, it's one of them where you would look at, right, are yields as good as they were a few months ago? No, they're not. But at the end of the day, it's one of them. Time in the market is better than time in the market. So if you're in the market for a decent period of time, you can observe how the pools work. You can observe taking yield, harvesting. It all builds up, and the compound interest builds as you go on through the months. That is the main thing, and it's just so simple to start. With the alts you already got, find your pools, earn your yield. That is it. Again, I'm going to say, if you want to book a call with us, you can join the group, you can go through it, but you can literally test it yourself. Literally test all this yourself. Start with a small amount. If you don't understand it, it's what we say to all the guys that join. Test a small amount. You don't even have to bother too much with the ranges. Just observe how it behaves. Then once you know it works, then you can start looking at how much you're going to deposit, what your strategy is, what your ranges are, what your long-term plan is for this. Because I went through on a video the other day, the amount of videos on YouTube, and I say this all the time, which are the constant price prediction videos. You can put it in Sui price prediction. Let's have a look. See all these. Bigger than Bitcoin, Sui, will Sui pump again? Am I buying Sui? It's just the same videos every time. And none of these are actually helping you make money. Let's be honest. Not a single one of these is going to help you make money. And that is the way crypto is at the moment. It's a game where we've gone past the bull run and people are still hoping that something's going to happen. And I've shown, if you look at a chart, let's just remove these. If you look at a chart, we've had the bull run, exactly the same as the other one, 77 weeks, Bitcoin halving to top of market, 2017-18, and then we've had here, 2021, 78 weeks, top of the mark, Bitcoin halving to the top of the market, then just gone, 24-25, Bitcoin halving top of the market. Like every single time before. And if we condense this, the next Bitcoin halving is approximately 100 weeks away, which is just under 2 years. So just under 2 years till the next Bitcoin halving. So what do you expect to happen now? If you look at the exact same pattern as before, it's literally top of the market, down, sideways, then back up, down, sideways, back up, down, sideways, back up. But that's, we're looking at what? Start next year, mid next year, mid the year after. So if your crypto is literally going to go sideways for the next 12, 18, 24 months, why not actually think, right, it's going to go sideways, it's going to go down for all this period of time. Why not actually do anything with my crypto? Because otherwise, it's just watching the same shitty price prediction videos. I keep talking about the guy that sits on his porch talking about XRP, the same thing every single day, and nothing ever happens, unfortunately. And if I'm honest, I'm not too bothered what happens with crypto prices over the next couple of years. It's just a focus of just accumulating more crypto. But the good thing is with the liquidity pools, they can just pay out. Consistently pay out. And the amount of times that people go on CoinGecko or CoinMarketCap and look at the charts and hope that they're going to go up, look at the favorite coin and it's gone sideways, and then they watch a YouTube video and it says it's going to go up and it doesn't. And it's unfortunately probably going to be more of this for the foreseeable future, in my opinion. And people don't like, me saying it, but that's just how it is, unfortunately. You've got to adapt to what the market is doing, and this is a way to earn some cash flow. This is what people are doing in the group, what we're doing to earn cash flow at the moment, because I believe that's the way to do it, as opposed to, buying, the new coin or whatever. And it all comes down to this. When people talk about, oh, it's risky, is there a bit of risk? Of course, there's no risk with anything. But I would rather take this route, rather than just this route. I've always been like that. So, and I'm not saying you have to put all your crypto into this. You don't have to put every single thing you have bought or earned into this. Just test it out. Wouldn't you pay capital gains if you did that? Yes. So again, if you want to know what I do, if I'm completely honest, I use Coinlay, which is this here. Track your wallets, it tracks your DeFi, and then literally all I do is print off a tax report. I'll get the figures to my accountant, and my accountant just processes it. I run a UK limited company for my YouTube, so literally all I do is show a profit and loss for everything, and then she tells me how much tax I have to pay. That's it. That's me. Different for everyone, but that's what I do. Yeah. If you do want to join us, if you do want to book a call, if you don't want to find out how you can fast track it, link is in description. But again, you can try it all yourself. That is it for me today, guys. Hope you enjoyed the stream. See you very soon.